We are joined now by Stephen Moore, visiting fellow at the Heritage Foundation, who's a former economic advisor to the 2016 Trump campaign. So it's a little bit confusing to me, Stephen, that the president mixes Wall Street and Main Street together. It's almost like he's conflating it, because when the stock market does well, yes, wealthy investors profit, but it doesn't necessarily mean that the average person, and here we could talk about his base, does well at the same time.
Well, I think that's a fair point. You know, what was interesting, I think that the trigger for the sell-off that started on Friday was the jobs report, where we saw, you know, a healthy gain in wages. And too many people on Wall Street think that real wage gains are a problem for the stock market. I happen to disagree with that. If workers are making more money, they have more money to buy the products these companies sell. I don't think it's inflationary. But look, I mean, the stock market's still up $6 trillion since Donald Trump was elected. So he's going to certainly deserve some of the credit for that. Of course, when the market falls, he has to take some of the blame for that as well.
Do you think he will?
Donald Trump hardly ever. I think he'll keep his mouth shut about the market while it's declining. I do agree that if you just look at every indicator on the economy, I mean, my goodness, we had the Federal Reserve Bank of Atlanta come out with a 5% growth forecast for the first quarter. We had this, you know, really great jobs report on Friday. What's been holding the economy back, in my opinion, and I used to talk to Donald Trump all the time about this, is wages. You know, the big problem with the recovery, such as it was under Obama, is middle-class workers didn't make any gains. And I think it's a great thing that we're finally starting to see wage increases for workers. It's not being driven by government mandates like minimum wage increases. It's companies like, you know, Walmart and others that are in a tight labor market are paying their workers more. So that's a good thing. I'm really bullish on the U.S. economy. I think we're going to get really solid growth in 2018.
We were talking about a tightening of financial conditions here. If there is greater volatility, if we see more choppiness in the markets, do you see that translating to confidence in any way, particularly when you have a president who continually points to it? I mean, for the average person, if they are listening to him in the State of the Union, then he's politically tying himself to a bull market, which is dangerous, surely.
Well, look, I think that the market certainly got ahead of itself. There was a little bit of irrational exuberance over the last couple of months.
You mean from the president or from the stock?
I'm talking about the market in general. And I think that, you know, the real economy, you know, when it improves, the market has to go up, and vice versa. I mean, this was to your question about, you know, what does the stock market indicate? It's a pretty good, it's not a great, but it's a pretty good indicator of where the economy is headed. I mean, you don't have a booming stock market when the economy is collapsing. So I think it's a good indicator about, you know, the condition of the job market, the condition of business confidence. We're seeing one of the things that makes me very bullish is the GDP report that showed really healthy rates of increases in business investment, which is exactly what we wanted from the tax cut.
Do you think this has implications for Jay Powell, though, and the relationship that he potentially has with the White House and with the president? I mean, the president's not going to like any kind of tightening, particularly if it impacts stocks.
Well, talk about a guy who's been dropped into the frying pan.
Absolutely.
You know, Powell certainly has been. We don't know, frankly. I mean, he's new to the game. I mean, he's just taken over as the Fed chairman. So we'll have to see what kind of a policy he pursues. I'm guessing, my best guess is that he will pursue policies that are somewhat similar to what Janet Yellen gave us. I mean, the big issue now is whether or not we have, you know, rate increases. The fact that the market has fallen probably reduces the likelihood of that, but I'm not afraid of a rate increase. I mean, look, if we had a rate increase, any signs of inflation out there would probably be squashed by that. I saw on your screen a minute ago that John, I don't want to misread it, but I thought it said John Tudor Jones was saying that there might be, you know, something like, you know, we're letting the inflation genie out of the bottle or something like that. Where is it? You know, where is the inflation? Show me where it is. I mean, we don't see it in consumer prices. We're seeing it a little bit in energy, but not any other area do I see inflation.
We need to see the whites of the eyes. Stephen Moore.
We're not quite there yet, though.
We'll see.
Stephen Moore, visiting fellow at the Heritage Foundation, former economic advisor to the 2016 Trump campaign. This is